9/13, September 13th, Tuesday, Market Analysis, Stan Ehrlich. Hey, good morning, everybody. As you recall from my previous several recordings, I have been looking for a rally high to occur, and I thought the market might come back up, and I'm looking at the S&P 500 here, but my comments are generally aimed at also the DIA and the QQQ and the 2000, or you could say the stock market indexes overall. And I also, by the way, will be covering some cycle information and some commodity information. And you're not going to like what I have to say about natural gas and maybe even crude oil. Not good, and looks like they might be going up. So let's get to it. My rally expectation on the S&P 500 posted and recorded was around 405, give or take a couple points. And I got that yesterday morning with the low being 408 and the rally high being 411 and 73 cents. Now, just because it got up above 10 does not mean that I was concerned or worried that it was going to keep going up a lot more. It was only chewing into a little bit of the overhead resistance, which frequently stops at the beginning of resistance, but sometimes you chew into it. We might see a little of that in the crude oil chart in a while. But the important thing is it gapped up twice. That's two bullish gaps in a row. That's very unusual. Now, a few months ago, we saw it in June on the way down, two big gaps. And a week later, it was a bottom. Here we have, obviously, a high yesterday because we gapped down this morning because of a fundamental report. And my little cutesy name about fundamentals is fundamentals, because I'm not a fundamentalist. My comment about fundamentals is fundamentals drive a trend. Totally understand that. You've got to have the bullish fundamentals in place for quite a while to continue a bull market on the average, and vice versa. But you're not going to be able to pick a top or bottom to the day or to the hour or even closer using the fundamentals. They typically are not known globally, so to speak, instantly by everybody to take action upon. But technicals reveal the way the market is moving, and the underlying reasons we will sometimes never know the fundamentals. But from a technical standpoint, you can, and I do, try my best to pick turning points, again, using technicals as opposed to fundamentals. But hey, not everybody's a short-term, intermediate term, that's scalping or swing trading type of market analyst or trader. And longer term investors, hey, they need fundamentals. It works for them. That's great. And it does drive a trend on an intermediate to longer term basis. Case in point, CPI, Consumer Price Index, came out this morning. Bad news. You know, inflation doesn't go away in a day or two or a week or even a month. So its ugly head surfaced again this morning on that report, and we have a big gap down on the stock market index. As you can see, the spider has gapped down a lot this morning. That is a huge gap down, very big, and it leaves an island top behind. Yesterday's price range from low to high is totally isolated and not overlapping any prices that the market was trading at the previous day or today. So it's considered an island top. Island tops or island bottoms are one of the most bullish, or I should say bearish first, bullish patterns there are. So this is an island top so far, and it looks like it's going to stay that way. It's not the top of the bull market per se, which is typical of an island top when they occur, and they're pretty rare. But it is a pseudo island top, and it has the same effect, which is, you know, slam dunk. And that's exactly what we're doing. So my downside objectives have been three-tier in the last couple of market letters that I've done. The ER signal report, if you're interested, is a daily written track record of the ER signals, which I've been doing for over 2 years. And it's based on everything that you're looking at. I think we had a momentary connection loss, but I hope this does work out. First time I've heard that. So I'll continue. And now the DIA also has an island top. The gap isn't quite as big. The QQQs have an island top. Again, the gap is not quite as big as the spider, which is not huge, but it's there. And the 2000 and the center down below here has an island top. And not big, but it's there. Right across a little support and resistance line I drew a while back. What's going to happen next? This is what you want to have happen next. We're not oversold yet, so I can't count on that trying to turn the market back up. In fact, just glancing at the RSI at the moment on the daily data chart, which is a 42.75, we need to get down to, well, traditionally it's 30. I like to use 25, and that's not close at all. So I'm thinking we're going to get relatively close to the low that was made on September 6th. And for the spider, that was a low of 388.42. Call it 388. We're trading 98. That's another 10 points. Momentarily, we are down 12 points and 70 cents already this morning. It is 8:11 California time, less than 2 hours after the opening. And we are low and last and sinking. This is very big down day so far. I think it has more ground to cover on the downside. It's exactly what I wanted, except it's bigger and faster. And what can I say? Except that the next stop, and it could possibly be today, is going to be the low 90s. We're 90s, just a hair below 98, 97.90 plus. So, and a new low. I'm looking at a possible another 4, maybe 5 or 6 points more today. That would be down 18, 19, maybe even 20 points in a single day. We haven't seen that for a long time. Yeah, I think it's not out of the question. I'm very bearish, as you know, if you've been following my recordings. And I am looking for eventually a low, maybe next month, to challenge or surpass the low that was made back in June 17th, and that low was 362.17. That's 36 points approximately still to go. A whopper. We're on what, the 13th of September. And the reason I say next month is because I'll start talking about the October lows now. We have a very historically reliable tendency for the market to have a low of some significance during the month of October. A lot of people say it's election related. That's only once every 4 years. I can't really agree with that, frankly. This is weekly data. I don't know why the October low exists, but look for yourself. The green bars are during the month of October. The little arrows are pointing to the lowest low in that time frame, or a tiny bit early or late. So we're smack in the middle. A couple of years ago, October low, a year before, year before, year before. I'll just slide back a little bit here. Year before, that great. A little early on that particular occasion, right on time, maybe a little bit. Is that October? Yes, it was October 12th. So I can shift my cycle lows. Whoops, that's too much, of course. To the right about a week, and I will pick up some of these lows. Every year is not exactly 52 weeks, so you have to make minor adjustments. Anyway, these October lows are historically quite reliable. Approximately 80 to the low 90 percentile area. I did research on this again and again for over a decade, and it's one of the seasonal tendencies because it happens around every same time of the year, every year October, that we have. Sell in May and go away, I don't think is quite as reliable. And when the time comes, ladies and gentlemen, I will be talking about the Santa Claus rally. And we have pinned it down, my partner and I have pinned it down to the time of day, to the minute on the average, of course, that you want to be buying just before Christmas and selling just after New Year's. That's essentially the Santa Claus rally, but that's the first time I've mentioned it. So it's too far away right now. But the October low isn't. And it's starting to look a lot more realistic because of the way we are dropping like a rock here. Enough for the October low. Let's look at crude oil. I mentioned a few days ago that it was breaking the support line, which it did, but it was only for one day, and then it came back above the line on a closing basis. I think I lost my connection. Okay, I'm sorry. That was the second time the connection was lost for a few seconds. So I hope this is recording again. Crude oil has rallied back up into the resistance area, which is around 86 or 85 something. But it seems to be stopping a little. Today's high is a little higher than yesterday, and we're a little lower than the close of yesterday. So we could have a bearish engulfing candlestick, which would cause me to believe that, so what, it rallied back up into resistance some. Now it seems likely to be challenging these recent lows and dropping off even more. Well, it remains to be seen. Right now, I'm not quite as optimistic about lower levels as I was a couple of days ago, 3-4 days ago. That's crude oil. Interest rate futures, the long bond, new lows for the long bond, which means higher rates. The lower this goes, the higher rates go. Market doesn't like high rates. The good thing is we're getting oversold. And that means that we're likely to soon, maybe it'll take a few days and it'll be a little lower, and maybe it's going to, I hope that third time now is not going to happen again. This oversold condition is going to resolve itself and we're going to have a good rally. Maybe I'll get a damn good reversal out of it, but I don't know. If it happens, it happens. They don't, turning points with the Ehrlich reversal signals we don't always get a signal. I can say that the market's turned because of other technical tools I use, but I like to see the green on the bottom, and that is the ER signal. I like to see the red on top, and that is the ER signal. And again, smack dab on the bottom. So I'm thinking that since I'm recording locally, this is connection wise not going to affect me, I hope. Let's look at forex for a moment. My data is not coming through, so hang on. Okay, I got my live hog chart. I got a good sell signal with Miss Piggy when I started making these recordings around August 16th. So this is a good example of a bear signal. I'm getting close to getting stopped out. That's my yellow trailing stop. We call it the STS, the smart trailing stop. It is not calculated like normal trailing stops. Special formula in here, of course. And you can see how it hugs the highs very closely as time passes. So I'm expecting to take a nice profit on this soon, but I don't know. Maybe, maybe not. Same chart on the right, it's just with a black background, different colors, and I don't have the trade line showing. Back to the indexes for a moment. Bouncing very slightly. Yep, we lost some data feed here, so it's going to be filling in a moment, but the daily is looking okay. And I got the E-mini, but it's a delayed quote, so not really adequate. All right, so I'm sorry about the delay here in quotes. We're having troubles. I'm in California, and some of these fires are affecting the internet and other things as well, to say the least. Even if they are, an hour or two away, or even 50 to 100 miles away, they still have an effect on residents, like now, probably. Okay, futures real quick. Futures. We got a buy signal in natural gas yesterday. A bullish engulfing in an oversold condition within a few days, and a green vertical bar. By the way, I want to make a comment. I will be using Ninja Trader charts and candlesticks soon. Don't know exactly how soon, to show you the signals. But right now we're using vertical bar charts. They're extremely adequate. I've been using these types of charts for, ouch, 52 years. So, and of course by hand, drawing my charts for the first 10 years or so. Now, we have a buy signal, natural gas. And we're trying to come down to the green dot, which is where I want to buy it, with the ER3, Ehrlich Reversal 3 technique. There is also an ER1. I won't go into it. But that's a buy signal. And unless we break below the low of the green bar, I'm going to have to tell you that I think this is going to go up. These signals don't tell me for how long or how high. I use other tools to help me decide on how long it's going to take and or how high it's going to go up. But you can see we got a darn good, right smack on top of the market, sell signal here on August 23 for natural gas. Too bad we didn't get some signals on the other turning points. But that's the way it goes. I don't pick every single high and low, but a lot of them. All right, I think that's going to be it for today. Thank you very much. Stan Ehrlich, signing off.